As a UK landlord, you might be sitting on a decision that could cost you tens, if not hundreds of thousands of pounds in the long run. With a range of new laws, ever-changing tax rules, and a complex market, you might be thinking that now is the perfect time to cash in your chips and walk away. Having said that, that could be a huge mistake for a lot of people. So in this video, we'll discuss exactly that. We're going to cover exactly all of the things you need to be aware of in the current market as a landlord. We'll discuss a framework which will help you decide whether you should keep, sell, or upgrade the properties that you currently own. And finally, we'll explore what a realistic hold or sell strategy would look like for you in the modern market. If you're new here, welcome. My name's James. I'm the co-founder and managing director of a property investment consultancy called Freighter Property Partners. We help time-poor investors invest across the Midlands, Yorkshire, and the Northwest. But this channel is all about your education, so let's jump into it. First, let's be honest. If you've been in the property game for a good few years now, you've seen a changing market. Sometimes it can feel that there is a war against landlords, even though everybody knows that private rented sector is a massively important part of the overall property market in the UK. You've got a wave of new rules and financial pressures that are squeezing profit every single month and year moving forward. So if you're feeling anxious about whether you should still be investing in property or holding the properties that you currently own, you're not alone. It's not news to anyone now that the big thing impacting landlords and people who have been in the game for a number of years is the introduction to the Renters' Rights Act. On the whole, the Renters' Rights Act is trying to address the right type of thing. It wants to give people that are renting properties a safe place to live and ultimately mean that they have more rights. Having said that, the abolition of Section 21 and the other things coming along with that aren't necessarily addressing the right thing. For decades, you'd be able to regain possession of your property in a relatively straightforward way. And obviously with these changes, it's yet to be seen how easy it will be to do that moving forward if you have problems with tenants. Most people don't have big problems with tenants, but it can happen, and it's yet to be seen the cost and the time associated of now getting rid of those problem tenants. On top of that, you've now also got Awab's law within the private rented sector. Following the tragic case, you've now got strict timelines in which you have to fix hazards like mold or damp. This is something that's come off the back of social housing, and for most landlords that own good quality homes, they don't have these big problems. Having said that, you do need to be aware that there are fines involved if your management company aren't managing the property properly. So make sure whoever you're using to manage the property is making sure they're on top of everything that needs to take place in terms of maintenance and management. We then need to consider the infamous Section 24 and the tax implications of that. And obviously, it's been around for a few years now, so if you're going to continue to buy property, you're probably already doing that through a limited company. But if you've been in the game for 15, 20 years, you probably actually bought your properties in your personal name at the time. So with all that pressure and the changing market, how do you make an objective decision and not a panicked one? For me, it all comes down to three factors. First, where you own the property. Next is how you own the property, whether it's in your personal name or via a limited company. And third is the current state of that property. We've created a framework which will help you decide whether it makes most sense to sell the properties and walk away, to retain them, or to upgrade them into better quality assets moving forward. First is step one, do the numbers still work? On the face of it, this sounds obvious, but you'd be surprised for landlords who have been in the game for a long time, they might have not looked at the numbers in a close detail in the last 2-3 years. And when I say numbers, I'm not talking about a vague idea of what you're making. We're talking about forensic detail and really going into depth into how much each property is actually making you. This includes tax implications, and this mostly comes down to how you own the property. Do you own it in your personal name or via a limited company? For anyone holding property in their personal name, you have to make sure that you're looking at the right tax for this property to make sure that you get a genuine idea into how much money you're making, if any, from that specific investment. If that number is negative or so thin that one thing for maintenance can wipe out a year's worth of profit, you need to ask the question whether it makes sense for you to retain this property long term. However, the biggest thing that will impact that and whether it makes sense to hold that property or not is where you own the property. And this is step two. In the current market, the phrase UK property market is very much obsolete. You've got a number of micro markets in the UK that are all performing very differently. There's a clear north-south divide in England, and there's other areas across Scotland, Wales, and other locations that are performing very different to the England market. So let's split the market down the middle. You've got the Midlands and the North and and then you've got the south. For years, properties in the north have always performed better from a yield perspective, but in the last 5 to 10 years, growth has definitely been better there as well. This means that if you own properties across places like the Midlands, Yorkshire and the Northwest, it might make sense to hold these properties long term, even if you're not making that much money in the short term on the rental profit. Yorkshire actually saw the best capital appreciation in the last 12 months up until February 26 of 3.9%. If your property is in somewhere like Leeds, or you've invested in the Northwest, like somewhere like Manchester or Liverpool, the likelihood is your yield is actually pretty strong in the current market. So if the numbers are strong and the property is in a good condition, even if you own the property in your personal name, it might actually make sense to retain that property long term. And on top of that, if you already own the property in your limited company, then it makes your life a lot easier, and it's probably quite an easy decision for you. If the property isn't currently in a limited company, then there's an argument to sell that property to your own limited company moving forward, especially if you want to still see the benefits of holding property in the long term. You need to be aware from there that there's going to be some fees that you're going to need to pay for. You'll pay capital gains tax on the gain in which you've owned the property for, and you'll also pay stamp duty on the purchase through your limited company. But if you've only owned the property for 5 years or so and you've only had a bit of growth, then it probably makes sense to sell that property, take the hit from a tax perspective, and then use that in the long term, especially if you're going to hold the property for a minimum of 5 more years. If you don't plan on holding the property for another 5 years, then it probably doesn't make sense to sell to your own limited company. So it might be just the fact that you hold that for another couple of years, or you just sell it altogether. The bigger problems come if you own property in London and the southeast in your personal name. Because the market has shifted in recent years, the London property market is unlikely to see strong growth in at least the next 5 years. And as of February 2026, when we had the most recent data, London property prices actually look to have dropped just over 3%. This means if you're barely making any money from a low yield on that property and you're not going to see any growth of the property in the next few years, then it makes your life pretty easy to make a decision one way or the other. If you still want to have capital in assets in the UK, you're better off selling these properties and then redeploying that capital in places further north in the country where you're going to get better yields, lower entry points and better capital growth. Third and final thing you need to be aware of when making this decision is step 3, the quality of the property. When I say quality of the property, I'm talking about the standard the property is currently in and how much maintenance and management is needed on that type of property. With the changes of the Renters' Rights Act and the introduction of Awab's law, if that property is not up to a good standard and needs a lot of maintenance, then it might not make sense to retain that property. Basically, every time your tenant has an issue, whether that's small or large, there's going to be timelines in which your management company are going to have to address those. With an older property that isn't in great condition, you're obviously going to have a lot more maintenance requests, and it might not just make sense at all from that perspective. Again, depending on how you own the property, it might just be better getting rid of these types of properties and redeploying capital into better quality assets where you can still be hands-off as a property investor. This type of property includes things like city centre apartments and new builds from national house builders or things that have been built in the last couple of years. With city centre apartments, obviously it's more hands-off because you're not liable for the whole building. You've just got your flat or your apartment that you own. So if something goes wrong with the roof, it's not going to be down to you to sort out or your management company to sort out really quickly. On top of that, if you do go for a new property direct from a developer, you've obviously got a 10-year build warranty as well. So if there's any structural issues or anything alongside that, it's not going to come out of your back pocket and mean that it costs you more money. It basically just gives you another layer of protection, and if you want to be a hands-off property investor, then this is something that makes more sense. So now we've gone through the framework of whether it makes sense to hold, sell or upgrade the properties that you currently own. You can now look at what makes sense in terms of sell or hold. So let's imagine you sell. The biggest pro is you get your hands on the capital in which you have tied up in these properties. You free yourself up from legislation headaches, tenant management, and worrying about a boiler breaking in the middle of the night. And then that cash can be used for anything else that you want to do. Whether that's investment in something else, you want to go on holiday a few times, or anything else in between. But you have to be brutally honest about the amount of money that you're actually going to get from the sale of these assets. Let's look at an example. You bought a place for £150,000. You sell it for £350,000. So in theory, a really good gain. So you've got £200,000 growth on that property during the time in which you've owned it. After a tiny tax-free allowance, you now have £197,000 that could be taxed. If you're a higher rate taxpayer, you now have 24% of that that's going to go to the taxman. That's a tax bill of over £47,000. On top of that, you then need to think of your selling strategy. Are you going to sell this property with a tenant in situ? And is the buyer going to want to inherit this tenant moving forward? Some buyers are actually looking for tenants already in the property, but with the new changes in the Renters' Rights Act, a lot of new investors are wanting vacant properties so they can reference check the tenants to a high standard before they rent the property out. Then again, if you've done all of that research and you're working it out, sometimes it just makes sense to refinance properties, release equity, and use that to redeploy capital elsewhere through a limited company. So, should you sell your investment property? There's no single right answer for everybody. It all depends on these three factors and how they affect you and the gain that you've got on the properties. You find the answer by not panicking and following this process to work out whether it makes sense to hold these properties, to sell them, or to sell them to yourself or upgrade to better quality assets further north in the country. Start with a cold hard look at the numbers. Does it make sense to retain them based on these numbers? Next, analyze its role based on the location of where the properties are. Is it delivering cash flow, and is there opportunity for further capital growth in the properties? Weigh up the real pros and cons of selling versus holding or upgrading the properties, and obviously be conscious of the capital gains tax you could be liable for if you go and sell these properties. And then finally, consider if you truly have the appetite to professionalize your property investment. Property investment in the modern day doesn't work for people that are just going to half-ass it or who aren't interested in owning property for the long term. You need to be able to adapt to the new environment, and if you've got a good management company managing the properties, then the likelihood is things won't change that much day to day. If after this video you're still stuck on what you should be doing, or if you're looking to deploy capital further north in the country in places like Manchester, Leeds, Sheffield or elsewhere, then I'll put a link to our website, Freighter Property Partners, in the description, and you can have a free chat with one of the team to see if we can help you. And if you found the breakdown useful, please hit the like button and subscribe to the channel, and I'll see you soon.